Hello, everybody. Welcome to the final TD Ameritrade Academy session. This is technically our sixth week, but fifth week together because we had five total of content, and this is the final Wednesday session. Last 60 minutes together. It's our Q&A session. We're going to spend this time going over questions that you asked directly. I got a lot of emails over the past couple days, and also some questions that have already come in the Q&A room right now. So we've got a lot to get to. I wish I had some kind of graduation certificates I could distribute to everyone, because you all earned it. Especially if you've attended every session, you earn more than a certificate if you've attended every session, because it's a lot of content and it's a lot of time to dedicate to it. But we learned a lot. I think we put ourselves in a good position here to capitalize on what we've learned in terms of structuring our portfolio to be diverse enough to handle different market conditions. Also learn about options and their power to generate additional yield, protect against losses, and even speculate on directional market moves for stocks that we don't even own. So there's just a lot of content. You guys have all the decks that you can always refer back to and review. Last time together. But by all means, you can always email me if you have specific questions, especially about your account, specific questions about your account or positions. Just have to keep in mind, unfortunately, that I'm not a financial advisor. I am just a registered broker-dealer. So there's a limit on how much I'm allowed to say, and that goes for all the entire event together, as well as tonight and also going forward. So cannot say too much, but hopefully in the future we'll all have the ability to I'm sure everyone's aware of the merger, TD Ameritrade and Charles Schwab emerging together. Charles Schwab has a more, I guess, a robust offering when it comes to advice, if you're looking for something like that, where TD Ameritrade especially has been really focused on the self-directed trader, giving the self-directed trader the platform and the tools to be able to make those decisions themselves. So anyways, we got to get started because, like I said, there was actually about 6 good questions that I had queued up, and then a bunch have already come in the Q&A room. So I want to make sure that we get to them and be able to discuss them at length. So let's dive in. Actually, for I think the majority of our time tonight, it's actually going to be on the software, just like it normally is for platform demos on Wednesday night. So I'm going to go ahead and share my screen, and we'll refer to the software. Also, we wanted to look at, just real quickly, I think it'd be fun to take a look at our trade from Monday night. If you remember, we placed that futures trade, the trade. And so I want to take a look at that one, see what happened. Some of you, if you were following along with crude oil, you might have seen what happened, but let's take a look at crude oil, because you remember what we did here. I'm going to first go to the chart. So I've got a 5-day, 5-minute. I still have the pivot points set up here because we use these to determine exit levels. So this was Monday we got into the trade. I'll just zoom in so we can see Monday through yesterday and then today so far. So Monday we got in, again, before the market opened. We were trading around here. We decided to, what time was it? Well, we don't get together until 19.5. So when was that? It's really right around here. Yeah, it's about a half hour into our session. So we decided, okay, here's what we're going to do. We're going to short one contract because we think it's going to hopefully come back down, touch that support 2 level, that S2 level, which is this green right here. So we went short. We also had a profit target and a stop loss. Our stop loss was this S1 level, this first green bar. So we got short, and instantly it started making us money. But then it came back, and we weren't necessarily losing money, but we weren't making that much money yet. So actually, this is, I'm trying to think here. Was it around? Yeah, it was around the then 8 o'clock, then 9 o'clock. I'm just getting confused. It's just the time has collapsed a lot here. Let me zoom in. This makes it a little bit easier here. Right. This is when we got in around here, a little bit before 8 o'clock. And then right up until, yeah, basically right before the market opened, still trading right in this middle zone right here. And then a flood of instantly shot down, and it hit our level here. And we did get taken out. I think we were at 60.73 right there. And we got taken out. And literally just, so this is the first 5 minutes, 10 minutes, 15 hit that S1 level here. So just in a matter of 15 minutes, it hit both our levels here. But we had an OCO. So there's our trade. Got short 61.02 and then covered in the first 4 minutes there. Took 4 minutes to get down to that level, but 60.73 we got out right there. So we can see on our P&L numbers right here, profit of $290, which is exactly what we were hoping for and planning for. So that worked out. Now what's interesting, go back. Then it just rallied up higher and then hit that pivot point, came up, and then bounced back down, ended the day right around that pivot point. The next day, traded is a big range here, drifted higher, hit that resistance level once, well, got really close to it, traded off of it, hit it again, traded back down, and then a lot of choppiness right at the open there, trading a little bit through it, but back down, and then couldn't break through until the very end of the day. It broke through and then rallied higher pretty quickly and came up and touched that second resistance level and stayed put where it is. So really interesting how it's trading within these ranges and touching these levels and then coming off of them. And just like that, just like today, if you notice it right now, today hit that pivot point, bouncing back up, and now it's testing that first resistance level. Right now it's doing that. So right now we're at this level right here where is it going to break through or is it going to come back down? Is now a good time to short it? I don't know. Again, we don't give advice here, but following these pivot points, support and resistance can be a useful tool for swing trading with futures. All right, let me jump right into the very first question because there were, basically I went through all the questions that came in over email the past couple of days and try to put them in order from like when we talked about them throughout the academy. So I'll start with this first one here. How do I find daily analyst grades and downgrades on the platform, and can I set alerts for them? All right, so first of all, analyst ratings can be found on the Analyze tab, Fundamentals sub-tab. Forgot I haven't increased my font size. Swing it up to larger here. Whoop. clicked on the bid price in my watch list and it pulls up an order. Anytime you click on the bid or ask price anywhere in the software, it's going to pull up an order. No big deal, just click delete. But I meant to collapse left-hand sidebar. Okay, Analyze tab, Fundamental sub-tab. We have these, we sourced just a few, but a few analyst ratings right here. Also, research reports available for download here. So someone's asking, how do I find on a daily basis upgrades and downgrades on the platform? That's going to be found over here on our left-hand sidebar. We have a lot of different tools here. Of course, the account info section. We have our watch list. We have our live news. I have a quick chart down here. If I keep scrolling down, use the news is the one I want to look at. Now, if you don't have use the news on here, and let me replicate it. Assuming you don't have news, you need to add it. Well, you can overtake, for instance, quick chart. If you just don't, if you're not using this chart window, switch this to use the news, or you can click the plus sign and add it this way. I'm going to overtake quick chart, so I'm just going to say switch gadget to use the news. All right, here we go. So I've got most active movers, pre-market movers, extended movers, ETF stock, so on and so forth. You can see all these on here that are currently visible. And I can click on one of them and it'll load a watch list basically for all the pre-market movers. Now there's some criteria for how they determine these. I don't know what it is. This is actually sourced from a third party, so we don't have access to it. But it's probably having to do with mark percent change. So we can Deutsche big mark percent change. Google, of course, after earnings. Shopify also must have had earnings here. So we're seeing all these things in the plus 5% movement pre-market. And I think we're also going to see some activity on the downside too. So you're seeing the losers in the pre-market as well. So big moves in the pre-market here. Anyways, we want to see analyzing changes. So how we can customize this is click this select categories button. And here we're just going to select what we want to view. Uncheck a few of these. And here's where event activity, upgrades and downgrades. Not sure what the difference is between these two and then just in general analyst ratings changes. But let's add them all. Click save and close. And there we go. So we've got upgrades. There's 2 so far. And rating changes, there's 17 so far. If I click on upgrades, it shows me right here. Again, ratings changes, it makes a watch list out of it. You can click on this little button right here and it'll give you that piece of news. So JMP Securities, Raymond James, Barclays, all the Wedbush, adjusts Alphabet's price target. So, okay, that's what this is. This is a ratings change. So that basically they're adjusting the price target. Whereas upgrades, they're actually upgrading it to a buy from something like that. Okay, we figured it out. Figured out that those are the ones that, that's the difference between upgrades and downgrades and ratings changes. All right, so that's where you can see them before market every day. Now, the second part to that question, how do I set up an alert for them? I mean, I can come over here and take a look at these every day, but they might be stocks I care about. They're not on my watch list, that I don't own, whatever the reason is. They're on here because they happen, but we want to know about specific stocks only. Well, we can set alerts for that. So I'm just going to scroll back up here. First thing I need to do to make sure everyone's able to receive alerts, click on the setup button and go to application settings. Then click on notification. Here, type in your email address. Then click get confirmation code. Once you do that, confirmation code will be emailed to you. Shouldn't take long. A couple seconds, maybe a minute or two. Once you receive that, you're going to come back here and type in that confirmation code, and it's going to say, correct, your email is confirmed. Great. Got an email set up. Now, this is totally different than when you opened an account. You opened an account, of course, you had to submit an email. That's with our back office processing department. The software doesn't have access to that, doesn't have access to that personal information. So you have to register your email separately on ThinkorSwim to set up these notifications. Then come to notify about, select alert is triggered, and here you'll make sure send email is checked. I obviously can't click it because I don't have an email address registered, but once I do have an email address registered, I can click this right here and I will get an email once an alert is triggered. All right, the next part is, how do we set up an alert? Specifically, the alert that we want these rating changes. So I'm going to go to the Market Watch tab, Alerts subtab, type in any symbol. Really, it doesn't matter. Type in any symbol. Because then all I'm going to do is click on the last price. Watch this. The very top says notify me on. Instead of price condition, because I don't want to be notified if a particular stock trades above or a level, I want to be notified of a ratings change. All right, so notify me on. I just used this drop down and went down to rating change. Okay, ratings change from who? Or is it whom? Not positive. My English isn't great, even though it's my native tongue. These three we can choose from, or just select all providers. Do we want to be notified for all symbols? Now, this is all symbols in existence. That's way too many, right? I want to be notified for either a specific symbol or watch list. So I can type in the symbol right here, the symbol table, of course, right here, about any of my particular symbols, but I want to know for a watch list. So click on the gear icon, go to personal, and my default watch list over there, or any watch list. I go ahead and select it right there. Now I'll make just the choice right here, notify of each rating change, and select the providers, or notify of the next ratings change only. Notify with, again, make sure send an email to all specified is checked. Again, I won't be able to because I don't have a registered email address. If you're logged in, it will play a sound. If you have the mobile app, which I think everyone does and should, send a push notification via the mobile app to your mobile device. And you can submit it now or at a specified time, expire it at a specified time, or don't expire at all. All right, got it created. That's how you set up an alert for ratings changes and ability to view daily analyst upgrades and downgrades. That question took a lot of time. Let's keep moving along here. My account is less than $25,000 and there is a limit of 3 day trade. Can you explain what a day trade is and what happens if I day trade over the limit of 3? Okay, First thing I'm going to do, under account info, remember we customized this section, net lick, cash and sweep, option buying power, stock buying power. I'm going to add another item here. Day trades left. Click OK. Another thing I got to do, go back here, customize gadget, uncheck this box, then click OK. All right, day trades left. Oh, it's still the little mini font, but it's there at least. And it says 3. Okay, first of all, what is a day trade? A day trade is when you buy and sell the same thing in the same day. Same. It applies to extended hours also, pre-market and post-market. If you buy 100 shares of, I'm looking at it right now, Verizon, and sell 100 shares of Verizon during the same trading session, it's considered a day trade. If you buy 1 share of Verizon and sell 1 share of Verizon, it's considered a day trade. If your account net liquidating value, the net liquidating value is below $25,000, you're only allowed to do that 3 times in a rolling 5 business day period. So their question is, well, they're stating for a fact, my account is less than 25,000. And I know that there's this limit of 3. Can you explain, first of all, what a day trade is? And then what happens if I trade over the limit of 3? Okay, here's the situation. Let's say, well, today, it's Wednesday, 3 left. Let's say I use all 3 today. I make 3 day trades today. I have none left. Tomorrow, I make 1 day trade. What happens to my account is that I get the pattern day trader flag placed on my account. I'm flagged as a pattern day trader. And since I'm below $25,000 in my account, I cannot make any more day trades for a period of how? Here's the situation. I can wait 90 days, 90. I can wait 90 days and the flag will be removed from my account. Or I can top up my account above 25,000, or I can contact TD Ameritrade and ask them to petition to remove that flag from my account. Now we're only allowed to remove from the account 3 times in a 12-month period. But when we remove that account, you're back to having those 3-day trades in a 5 business day period. Now, let's say I don't do any of those. I have the flag in my account. My account's still below 25,000. I did 90 days. I didn't ask TD Ameritrade to lift the flag, or maybe I ran out of the ability to ask TD Ameritrade to lift the flag. What if I make another day trade? If I do, then my account is going to be set to closing transactions only for a fresh period of 90 days, or until I bring the account up to 25,000. Closing transactions only means I can only close open positions, cannot add to any new positions. At least before I did that, just when I had the flag on my account but no day trades left, I could still buy something as long as I held it till the next day and sold it the next day. That's fine. I can do that. I just can't make any more day trades. Let me scroll down here because I set something up for everyone. I'm going to this scratch pad. Just bring it to the center of the screen for everyone to see. Basically, we went through a week here. Not sure what's the easiest way to view this, but basically, here we go. All right, Monday, I buy 100 shares of XYZ. Then I sell 100 shares of XYZ. Then I buy 100 XYZ. That is 1 day trade. and I have 2 left now. All right, now it's Tuesday. I sell the 100 shares of XYZ that I bought the day before. That's not a day trade because I bought something yesterday, held it overnight. I'm using air quotes for overnight, so we're talking about overnight US time. And then I sold it the next day. Not a day trade. I still have 2 left. All right, it's Wednesday now. What do I do on Wednesday? Reestablish a position. I buy 100 shares of XYZ. So I have no shares. Now I buy 100. And I sell 1 July 55 strike call against those 100 shares. A day trade. I still have 2 left. So I've still only made 1 day trade on Monday. None of these other trades constitute day trading. So I still have 2 left. All right, it's Thursday now. I buy 100 XYZ and sell 100 XYZ. This part gets a little interesting. Is this a day trade or not? Let me make the case here. People might say this is not a day trade because they're saying, well, I own 100 from yesterday. And so when I sell 100 today, I'm selling those shares that I bought yesterday and not these shares that I bought today. However, in the eyes of our regulating body, FINRA, they do not differentiate between different accounting methods. They only look at the trading activity on the day. So they see that you bought 100 shares of XYZ and sold 100 shares of XYZ. They count that as a day trade. Even though for accounting purposes, you might be trying to do some mental gymnastics and saying like, well, actually, no, I didn't sell those ones. I sold the ones I bought. No, it doesn't matter. The regulating body, this is a day trade. It pairs these 2 positions up. So that counts. Now you only have 1 left on Thursday. All right, on Friday, what do? I buy 1 July 55 strike call. Remember, we're already short this one, so we're buying it back. But then I replace it with selling a July 56 strike call. Is a day trade? Does this count as a day trade? No, it does not. You made 0 day trades on Friday. You still have 1 left. Because it has to be the exact same thing that you're buying and selling. The fact that we're doing a different strike means it's not the same thing. It's a different product, really. We bought a 55 strike, 56 strike. Different. Now, I only included 1 more day here. And it's a very important part of this. Now it's Monday the following week. I ended Friday with only 1 day trade left. And remember, we're allowed 3 day trades in a 5 business day period. So do I get my 3 day trades back? Well, on Monday, I only bought shares. I didn't sell anything. So I didn't make any day trades. But look, I only have 2 left. I don't have all 3. Because the only one I got back was the one I made on the previous Monday. It's a rolling 5 business day period. So the previous week, I made 1 on Monday, then made 1 on Thursday. So I only have 1 left. I made 2 total trades, 1 Thursday. So the following Monday, I get the 1 back from Monday, and I'll still only have 2 left for the rest of the week, assuming I don't do anything else. I only have 2 left the rest of the week until Thursday. I'll get this 1 back, and I will have a total of 3. That's the way it works. think everyone understands that. Hopefully you do. I know it's a little confusing. The great thing is that we have a little bit more ability. We're allowed to lift that flag more than once. It used to be once for the life of the account. Gosh, that was strict. Then it moved to once per year, and now we're allowed to do it 3 times per year. So that's good. If you find yourself getting into these types of restrictions, first of all, maybe you should have an account over 25,000. But second of all, just be aware that we're only allowed to do it 3 times, 12-month period, not a calendar year. It's kind of the same thing here, 12-month period. Someone asked, does one vertical spread entered considered one day trade? If you buy a vertical and then sell that same vertical, that is one day trade. Even though you're basically trading 2 contracts in the vertical, if you buy it as a vertical and sell it as a vertical, trade. Good question. Let me see what else we got here. Some questions coming in a while ago here, actually. Best way for proper sizing for each trade, diversifying over different industries, sectors. What's the best way? I mean, all right, here, let me do one at a time here. For proper sizing for each trade, first of all, let me talk about options trades. That's a little bit easier, I think. For me personally, just because I make options trades than I do stock trades, but for options trades, I never, or at least I try never to risk more than around 3% of my account value on the trade. I mean, the problem is, though, that what we're doing here is we are setting up high probability trades. So our high probability trades will have high probability of success, but they might have a little bit of a risk reward ratio, meaning we're risking a little bit more than, well, a lot bit more maybe than our potential reward. Still, the point is they don't always work. And so we need to find a happy medium between our max loss, because a lot of these things, we take them to expiration and let them run their course. But if they go against us, we might realize max loss. And so if we do that, sure, we have enough winners to compensate for that. And so that's why we do these high probability trades. So getting into the trade, first of all, max, don't want to risk more than 3% of the value of my account. Try and get it closer to actually 1.5%, 2%. That's what I do for the options trades. Now for the stock trades, now listen, it's hard to build a well-balanced portfolio and to constantly be reviewing your positions and recalibrating, adjusting, and reposition sizing. As you can see with ours, we tried to do an equal amount, around $5,000 for each stock. We didn't have nearly enough time to get a proper portfolio set up where we are spread across multiple industries. We're only in probably like 3 or 4, maybe 5 here. And some of the risks, well, I don't want to call it risk, but we invested a lot more in these particular stocks. But again, we try to keep it close to the same here. I mean, it's really just how you expect, what you expect to happen with the overall markets in the next couple of years. I know it's impossible to see into the future, but we can kind of gauge, what's been trending direction and how long do we see this lasting for. Jerome Powell is speaking today. I think you're going to get a lot of, well, I'm not sure about clarity, but talk about interest rates, inflation, and what that might do to certain sectors here. So, it's difficult. I think, for some people, and I think especially maybe a U.S. citizens who have a retirement account, which of course that money I'm not going to touch for a long time, using ETFs to kind of gain exposure to a certain sector or a certain industry. There's nothing wrong with that. ETFs have a cost to them, though. There is that fee associated. When I say there's a fee, it's not like a commission. It's not taken out up front or on the back end or something like that. Constantly adjusted on almost a daily basis fee. So I mean, it's since you can't see it, it helps that you don't see it happening, but it's a factor that you need to consider, especially if you have a bigger account size. Then you might be in a better position to actually build this portfolio yourself, pick the stocks yourself, do the investing yourself, and especially with zero commissions now, doesn't cost you anything to get in and out of these trades here. Let me see here. How can I view my itemized trades in ThinkorSwim? We were kind of looking at that earlier. Monitor, account statement. If I open up trade history, this is where you see your trades. Now, it doesn't them up. I mean, we haven't really gotten out of any positions except for maybe our crude oil, and those actually happen to be right next to each other. But like this, we went short 2 micro E-mini S&Ps. I actually covered those a little bit later, but it doesn't pair up the buys and sells here. You can only see every transaction in its chronological order here based on execution time. So if you want to see only a certain symbol, you can filter just like that. You can see got in, got out, sold here, bought here. You want to see what the effect was on your cash balance? Say, okay, well, I got to go back to the 26th at 2104. So open up cash and sweep vehicle, find the 26th at 2104. Here it is. There's that closing trade. $290 cash account when I closed out of that trade. People asking about the sizzle index and how to use it. Let me see here. Someone's asking about OCOs. Yeah, OCO on our crude oil. So there's only commissions on options and on futures. Are we charged on all 3 entries? First of all, there's an entry order. We got filled on that. And then there's an exit order. We got filled on that. But this was our profit target. We also had a stop loss, which was canceled. So no, we're not charged on the order that doesn't fill. Only on the ones that fill will we get charged on. All right, let me see what else here. You guys are asking a lot of good questions. I tell you what, the last couple Academy sessions that we had, we did not get many questions come in this during our live session here. Sizzle, someone asked about the sizzle index. We'll do that right now. Trade tab. I'm going to go to today's options statistics, and that's where you will find your sizzle index. Sizzle index is base case 1.0. That means today's options volume has been the exact similar amount. I could say exact same amount as the previous 5 days average volume. Anything less than that means today's showing slightly less options volume compared to the previous 5 days average. We also break it down for put and call sizzle index. So we're looking at Bank of America. This is yesterday's data still. 144,000 options contracts traded yesterday. That was a little less than the previous 5 days. So the 0.8 sizzle index. If we open up, we had earnings. Microsoft, their sizzle index, almost 2 times the amount of options traded yesterday relative to the previous 5 days average. Google, almost the same thing. Alphabet, I should say, 1.8 times as well. Let me see here. Guys, definitely some of these I'm going to have to email you back because I'm not going to be able to get to all of these here. For a vertical trade, if we close the trade with a 5-cent debit or less, will TD still charge a commission? Yes. The time we won't charge a commission, look at my Oracle trade. We sold a call spread, the 81.82 call spread. If we buy the call spread back, look, for 4 cents, we will charge a commission. The only time we do not charge a commission is if we buy back the short leg for 5 cents or less. Buying this back for 5 cents or less, we will waive the commission fee. Won't be charged. But it's not, that deal does not apply to buying back the entire vertical. Common mistake there, common misunderstanding, I'll say. Another question about IV percentile. So IV percentile, I'll go back to the trade tab here. That's over here on the left-hand side. This number right here. Again, I think that, the best way for me to explain this is just give you the definition of it. And hopefully with the definition, you can kind of understand how it might be useful. So, I mean, I don't use this thing for every trade. In fact, for very few trades, I will, but it is important. Current IV percentile. Again, percentile is kind of like rank. Kind of like rank. I know they're not the same. But it's saying the current implied volatility is 5%. The implied volatility for the past 52 weeks has been in a range of 17% and 52%. So right now it's at 25%. Where is that on a percentile basis relative to where it's been? This says 24th percentile. So in the bottom quarter, although basically right there. At least we can say it's currently lower in a lower half of the range of the past 52 weeks. Now, what does that tell us? Well, it just tells us that, relative to its own implied volatility, it's currently kind of low, actually. Because all stocks are going to have different kind of different ranges. So if I look at it right now, it's at 25%. How do I know if that's a lot or a little for Oracle? Maybe I don't watch Oracle every day, every week. I don't know if this is high or low. Well, IV percentile will tell me that. All right, let me move on because these are, again, questions that people got in over the past couple days. Got to make sure and then if I'm unable to touch, and I'm not, like I said, not going to be able to touch on everyone that's coming in the chat right now, I will send you an email. We can have a discussion offline. All right. Can you elaborate on what an option trader can do to repair an option position that had gone against them and not take the loss before expiry of the contracts? So that's one word that I never get used to. EXPIR. Everyone uses it. I get it. But coming from Chicago, we just never use that. It's always before expiration of the contracts. I think both words mean the same thing. But point is, what can we do to not take the loss before expiration of the contracts? Assuming the contracts are still 35 days till expiration when it went against the trader. Now, we did have a position that actually was just like this. Thus, still had some time to go here. And we talked a little bit about it, but it has since expired. I think it was our long Intel. We bought an Intel call, and it went against us. We talked about some of the choices we had. Now, they had earnings, and the earnings weren't good enough to make the stock rally, to make that call a profitable trade. One of the choices we had was to just sell the call. Another thing we looked at was selling a different strike, same expiration, to generate a little bit of premium, which would be locking in a loss, but a much smaller loss than if we just realized a max loss. And in fact, a much smaller loss than if we just sold the call where it was trading at that time. Now, that one was a pretty good example to look at. Right now, we don't have any option trade that's gone against us, which is good for us, but bad for our learning purposes. So what I did here probably isn't going to be too useful, but let me pull up Tesla. I went back in time here and assumed that we had sold this vertical spread for $3.25. We sold a put spread on Tesla, before earnings. As we know, Tesla went down after their earnings, and it's trading down even a little bit further now today. It's really starting to approach our. These are the 28th of May. They still got a whole month to go before expiration here. Now, if it closes above 690 at expiration, we are still realizing our max profit on this trade. We're in a losing position right now. We're down almost $1,100. It's because there's still so much time left to go on this trade. So, listen, here's what I would say about this one. I probably wouldn't do anything just yet. I would wait it out to see if Tesla comes back up. Listen, I got in this trade for a reason, and I was comfortable with the max loss and the max profit. Got into the trade, and I was confident that maybe not right after earnings, but after a couple days or a couple weeks, that it would come up at least back higher than our short strike of 690. Now, if I'm not in that camp, it might make sense to exit the trade completely. Here's the thing. There's no way to, like right now, you can't say, let me make an adjustment so I avoid loss. It doesn't work like that. If you still want to make some adjustments, if you're not as confident in this position as you once were, and you can't see it on here because I'm not actually in this trade, it's just a simulated trade down here. Here it is. I'm short this one, long this one. You could consider rolling the spread a little bit lower. But you got to keep in mind, you only took in a 325 credit for this trade. So to do any kind of roll, it's going to cost you something. Here, I'll show you what I mean here. I'm going to simulate buying back this spread. So I'm going to buy on the 690, or click on the ask on the 690. Push and hold control, click on the bid of the 680. And now I'm going to, what maybe we're confident that it'll stay above 670. We just want to move our spread a little bit lower. Keep it in the same month, but maybe move it a little lower. push and hold control, click on the bid price of the 670, and then come down here to my, 660, keep it the same width, 10 points wide, push and hold control, click on the ask price. So this one would cost us, 73 cents to roll it down. So it's chipping away at our initial credit. What does that look like on the risk profile? Well, now with the stock trading right here, it's not in of hitting our short strike. We still bought some room here. Now we're still profitable to the downside. However, look what's happened to our risk reward ratio. So looking at this number down here, the blue number next to May 29th, it's now only 25.20. It used to be 32.50. Now just 25.20. Our max loss used to be 67.50. By doing this, our max loss is now almost 7,500. So there's no, we've all heard that saying, but this is one way, if your confidence has kind of weakened based on what's happened with the market or this particular stock, you want to say, because I know I still got a whole month to go, not confident in these strikes anymore. One way you could do it is you could roll down. And now, so this is a 73 cent credit or debit. You could play with these strikes here too and see what your risk reward looks like if you move it down to even further. We'll do the 660, 650. It costs you $1.18 now. But we bought an extra $10 of buffer here. Now our max profit is only $270. Our max loss is almost $8,000. So there's that trade-off. Right. What else was the, there's like a part B and part C to this question. Conditions be the same when opening a short strangle versus short iron condor. So when we talk about entry conditions, or at least I think maybe they're talking about picking a strike. Let me see. Facebook, they haven't reported earnings yet. Let me see. Netflix already has. Let's just do one that doesn't have the, I don't think it matters here, but entry considerations. So when we're picking a strike for our, like an iron condor, we want at least this is what I'm looking for. Gives me good risk reward, at least 40 or less for the delta when I pick my short strike, 40 or less for my delta. So I'd be here and right here. I'm definitely not opposed to going out to 30 either for my iron condor. Anything less than that, you're not going to be receiving, maybe as much credit as would make it worth it. But this gives us a good balance for risk reward. And of course, it also depends on your analysis of Netflix. You did some fundamental and technical analysis of the stock, and you're comfortable with this range over the next 30 days here. Now, when doing a short strangle, the answer is no. My entry considerations are not the same at all, because a short strangle is a naked call and a naked put. Naked call is extremely risky. If I'm doing a naked call and naked put, I want to be pretty confident that it's going to be out of the money. Now, there's nothing to say for sure that it's going to be out of the money at any point in time, but I'm going out to a far delta here. First of all, I don't do this trade at all anyways. So let me just say that right there, because I just don't like that much risk. But I would definitely go out to a further delta, give myself a higher probability. Now, here's the thing. The margin requirement on this is going to be extremely higher than an door because of the unlimited risk. But absolutely different strike choices for those two strategies. Here's a good question I think comes up all the time. And we got to end it on these last two. But if you guys still have more questions, please feel free to pump them into the Q&A box. Like I said, I'll shoot you guys an email, and we'll have a discussion offline. All right, this question: how you view a chart of an option? Very common question. I think you guys will all agree. I want to look at the chart of an option. I'm going to go to these monthlies right here. These got decent open interest in them. I want something that kind of trades a little bit. 510s have a little bit more here. All right, so let's say I just want to look at the chart of the 510 strike calls. How do I do it? Well, here's one way. First of all, options have symbols just like stocks do. Stock has a symbol, futures have a symbol, everything has a symbol. So do options. It's an extremely long string of code. If I right click on the bid or the ask or the open interest, I think it'll work there too. As long as I right click, I get this pop-up menu here. Here's that code. Here's the symbol, the ticker, the option. Clicking on copy is a great thing. It's just going to copy it to my clipboard on my computer. I can also add it to a watch list. If I want it on my default watch list, I can actually track this option on my watch list. So there's two ways to view a chart. One is to copy it and then just go to my chart and use the Control V, as in Victor, Control V to paste it. Another thing is I can go to Info on, then go to Toss Charts and select which cell I want to view the chart in. Sometimes I like doing this because I know my first cell, it's got pivot points on it and a bunch of other stuff. I want a clean cell to send it to. So let me send it to the one directly next to it. And now I can just right click and select Mac. Here's a chart of the option. Now I'll say, pay attention to what you're actually viewing here by going to Style, Price Type. So we actually are looking at trades. These are real trades that happened on this option. Pink line by default is a study of theoretical price. Obviously net earnings. So coming into earnings, this option was trading around 50 bucks, sold off. Obviously, it's trading only down around this level at this point here. I moved to an intraday time frame. These are also actual trades that happened, but it doesn't trade, these options don't trade that regularly. For instance, looking at the time here, there were 3 contracts, 5, 2, right? So there's not that much liquidity in here. So that's why the chart kind of looks like this. What you can do, especially for less liquid options, this one's decently liquid, but for less liquid ones, you can go to price type and go to mark. And it'll look a little bit more fluid here. This is just the mark price of the option, where it gets up to. The candles look a little bit better. High price of the mark, the low price of the mark. And that's how you chart an option. All right, we're up on time. Last question, though. And I think this is also one that people ask a lot, too. Is there a way to automatically close or with an OCO for a spread trade? I think I just copied that verbatim from the email. Is there a way to automatically close or use an OCO on a trade? The answer is yes. But the answer is also, I don't necessarily recommend it. Let's take a look at our NVIDIA, for example, here. So we sold a call spread, and we know our max profit is if the value of the spread goes to 0. If it goes to 0 and it expires in the next 2 weeks, we make our max profit. We don't even have to buy the spread back. So we don't have to pay commissions, and we just realize our max profit. That's basically our profit target, it going to zero. What did we sell this thing for? 1655 minus 1445, 210. So we sold it for 210. And again, if it goes to zero, that's our max profit. Maybe we want to buy it back if it goes to 1. Okay, what do we do? If that's the case, here's how we do that. We right-click on symbol, go to create closing order, and select this first one here, buy vertical. And we enter in the price that we want to buy it back for. And we set it to GTC. Confirm and send, that's it. There's our profit target. Buy it back for $1. Nothing really wrong with that. It's very possible that the value of the spread goes down to $1, but then the stock moves the opposite direction and it turns into a losing trade. That's no fun when we could have taken a profit on this. So nothing wrong with this order. I endorse it. However, when I get into a trade and I sell premium, I want to collect that entire premium. So I typically don't have these on there. But you can do it. Now, on the other side, the risk is if the stock comes up and goes higher than 650. At expiration, we're going to be at our max loss at that point. Then the spread's going to be worth $5. We sold it for $2.10. The most it can ever be worth is $5, the distance between the spread. So if we want to buy it back, if it gets up to maybe $4, we can do that easy. It's actually very difficult. If I right click, go to create closing order, choose this one, change this to $4. Keep in mind the order, remember our order types discussion. A limit order to buy says, buy it at this price or better. When it's $4 or better, I just want to buy it back at the next best price. Well, it's already less than $4. So it's going to fill instantly at some price. We're not sure what. It just won't be higher than $4. But it could be $4. So obviously we don't want to do a limit price. Well, we do a stop order. The stop order says wait till it gets up to this price and then buy it back. But there's much more actually inherent risk with this. It's saying wait until the mark on this spread is $4. Now the mark on options in general, even single-legged options, but also on spread trades, especially on spread trades, can be extremely volatile. And it can go up higher than the distance of the spread. It can go up to $6, $7, $8, $9, $10. And especially right when the market opens, before market makers can tighten the market, it can be much higher. And so the fact that it's just the nature of options trading, spreads can get widened out, and there's nothing quote unquote illegal with that. We can get filled at a bad price by doing a stop order on options. So while you can do it, and first of all, we don't make any recommendations. I personally don't like doing this because I have a natural stop order of $5 in here. As if this gets up to $5 at expiration, I get out at that price. But if this gets triggered, it's possible I get filled for more than $5. Not likely, but it's definitely possible. And also, I could get filled at $4 right now, even though it's only trading for around $2, because when those spreads widen out, maybe this one is a little bit wider than this one. This one's wider than that one. I can get filled at the $4 right here, and then all of a sudden, spread comes back into $2. So I typically don't do stop orders with options, full stop, period, whatever I'm trying to say. That's the end of the discussion. Is that I don't like doing stop orders with options. Certainly, yeah, place some limit orders, try and buy it back at a profit with a limit order, but typically not with a stop order. All right, that's going to do it. 5 minutes over. We could actually go on for a lot longer, but I'm going to give you back your Wednesday nights because it's the end of time. We are up on our 60 minutes. We are up on the TD Ameritrade Academy. I think everyone is in a better position now than they were a month ago. Hopefully you feel a little bit more confident, at least with using the software, but also with understanding some of these strategies and techniques for finding opportunities out there. We are going to have them archived. I just looked it up. We have our contract with the On24 folks until September. I can't guarantee it's going to be up there past that point, but you can always these sessions with the links in the email. If you ever misplace one, you can email me, ask me for a specific one. I'll send it over to you. But that's it. Thanks, everyone. I really appreciate you joining us here. If you need anything else, like I said, I'm here for you, or contact our support desk. They're all equally knowledgeable as I am. So thanks, you all. Have a great night. Have a great rest. Trade safe this week. A lot of stuff happening. We got Biden's speech tomorrow morning, our time. Fed Chairman Powell today. Tech earnings, things are going crazy. So just be safe out there. Place some stop orders if you want to. Buy some puts if you want to. But let's have fun with it also. Let's not put too much risk on the table and know what we're doing. So thanks again. Have a good night. Bye-bye.